Good afternoon. What's going on, guys? Good to see everybody. Mr. Max Voltage. 2 in 1 day. I feel special as all hell. This is exciting. How am I supposed to know if anyone here bought a heat bit? I don't know. Just answer yes or no, you freaking bastard. Trolling me already, Max. Jeez. Coming out of the gates hot. Patrick Murphy, what's up, buddy? Joker Miner, 4J, what's up, man? Nah City, Mass Boost. Who else is here? Let's see. Rud Puts, Chris Hanley, good to see you, buddy. Patrick Murphy, everybody else that I missed, good afternoon. All right. Yeah, so I don't know if you guys saw Hobbyist Miner's video. We're not gonna watch it, but I'll mention it if you guys are interested in seeing it. This right here, he talks about more or less how the heat big guys ghosted him, pretty much, for the most part. So yeah, I was saying that thing was a scam from day one. Not really a scam, but like it was a ripoff. Let's say that, right? It was more of a ripoff. It's a used Antminer S9. They're buying from friggin' pallets. They're throwing them in these nice friggin' plastic shrouds to look all neat, but inside they're just old, right? That one broke and they ghosted them. So not surprising. I just hope nobody bought one. I don't know, $1,300, whatever it was, for a Antminer S9 that you get used on eBay for $100 is yeah, pretty bad. Anyways, 27,492 for Bitcoin. We have Ethereum 1839. Doge is still under 8 cents. LTC 87 bucks. XRP 45 cents. Crazy. Let's see. How are we looking on the day? Oh, things are starting to pick up. Damn, render's up 8.1%. Nuts. Caspa 6.7. It was 6.6 this morning. Pancake swaps dropping. Crazy. You guys already saw the fear and greed index. I'm not gonna blind you guys with that, but well, I guess I will. 53 we're looking at. Also, whoever gave me this in the chat, I forget who gave me this. Was it Chuck, maybe? I forget. Anyways, this doesn't, I don't know if this is legit or not. This SEC crypto assets deemed as securities, whatever. So I don't know if that's like super legit, but I don't know. You guys can let me know what you think about that. I'll leave that link, actually. You know what? I'll drop that in the live chat. I didn't have time to like rip through this thing. I actually have to do a few things at 3 o'clock. I thought I was gonna have to do them at 2, but that's not how it went. So anyways, let's dive into Coin Bureau. Actually has a video out. Just put it out a couple hours ago. Crypto news, BTC crash, TRX, ZIL, BTT, Gensler hearing, and more. So I want to see what the heck he has to say. It's a 20-minute video, and we can just chat about it in the live chat. Throw any questions in there you might have, or you know, anything. So let me know, keep me posted, and we'll go from there. Let's do it. And it's not gonna catch up. Okay, hold on. I knew this was gonna happen. I freaking knew it. Let me put this into my other browser. Give me 1 second, fellas. Bear with me. Annoying. I don't know why Google Chrome does that to me. Max, how does this work for you all the time with the 355 tabs all at once? And I can't get, you know, more than 10 tabs to work. It's probably my CPU, to be honest. But all right, nonetheless, let's get back into it. Here we go. There we go. Epic fail.
Welcome to the Coin Bureau Weekly News Roundup. Here are the top stories in crypto this week. Crypto market crash.
I honestly love this guy. So huge shout out to Coin Bureau. I'll leave a link to his channel down in the description below.
Major coins and tokens tumble by more than 10% following a multi-week rally. Is this a standard correction in an uptrend or a continuation of the previous downtrend? Stablecoin uncertainty increases. US politicians declare Congress is starting from scratch on stablecoin regulations after an intense hearing with SEC Chairman Gary Gensler. Everything you need to know. Exchanges migrate overseas. Coinbase and Gemini establish global operations as the EU clarifies crypto regulations, and Chinese banks take on crypto clients. What could this mean for the crypto market? Apple versus banks. The world's largest tech company begins offering high yields on deposits, incentivizing even more money to flow out of small banks. How?
Real quick, the wife said Infinity Healing, thank you for becoming a subscriber. I don't know if I didn't see that. Was it just a pop-up? I don't think he became a VIP. I think he just became a subscriber, but either way, you should still join Discord. Appreciate you, buddy. Red Panda Mining Live. Google Chrome sucks. Use Brave browser. All right. I'll download it. I know. Geek of All Trades was yelling at me earlier.
Could this impact the economy? And a closer look at last week's top-performing cryptos and where they could be headed next. All this and more in just a moment. Good morning, afternoon, or evening. Thank you for tuning in. My name is Guy. None of what follows is financial advice, and here is the news. Last week, the bottom fell out of the crypto market. The fact that stock indices like the S&P 500 and the Nasdaq continued to trade sideways suggests that the cause of the crypto crash was specific to crypto. It's not clear what crypto catalyst caused the crash, which suggests that it was a combination of factors. For starters, there were over $250 million of leveraged long positions liquidated. For anyone wondering, long liquidations are caused by traders who bet that prices would go up and are forced to sell when prices start to come down. This causes prices to fall further, causing more liquidations, etc.
Real quick, Mr. Mark Marie, I think your name is. I'm sorry if I butchered that. He said, I am new to mining, so I got my first rig of 3060s, and he's not sure of what to mine. Any suggestions? Guys, throw some suggestions in the chat for him. And Mr. Mark, if you have any questions, join Mr. Mining Discord, and we can help you out with overclocks or whatever. It might help. And no worries, Miss Pocket Change. That's what I thought. I was going to say, I didn't see anything.
Etc. According to liquidation data from the block, almost $200 million of these long liquidations came from traders who bet that BTC's price would go up. This would explain why BTC's price initially fell much more compared to major altcoins such as ETH, which only started to fall a day or two later. On that note, last week's crash appears to have begun on Tuesday, the 18th of April. Logically, it was only after BTC's price started to fall that the cascade of long liquidations began.
Yeah, Mr. Tom Carey. Oh, what the WTF is Heatbit? You don't know what a Heatbit is? All right, so Heatbit, the reason I brought that up, hold on, let me show you. So Mr. Hobbyist Miner right here made a video about it. He made what?
Welcome to the Coin Bureau.
Oh, now it starts to play. Okay, now it starts to play. Anyways, over here, again, Heatbit, he made a video about it saying he was wrong about it, and it's a complete piece of shit, more or less. And yeah, so I was claiming that from the beginning, but they ghosted him more or less. And it's pretty a shame. I'm more shocked that they ghosted him versus the thing being a complete POS, because I mean, we kind of already knew that, but whatever. So that's a Heatbit. It's an S9 inside a plastic shroud that acts as a heater, and it's a bunch of BS. It's a bunch of BS. You don't even fill your brain with it. Never mind. I took the poll down. Forget about it.
It's not clear what caused that first domino to fall, but it could have been as simple as sentiment getting too bullish, too much greed. If you've been keeping track of the Fear and Greed Index for crypto, you'll know that it's been flashing greed for a couple of weeks now.
And if this is what we check every morning, guys, this Fear and Greed Index, again, it is based off of just the crypto market, right? So this thing, it's a good indicator when things start getting into the greed territory. Typically, I would say over 70% is really when things start getting really nerve-wracking for, pushing up further. But we have seen 90s. Like it's been ridiculously high, obviously in bull runs. But this chart is amazing when it comes to trying to figure out what to do. You know what I mean, in the market. So gauge that as you will.
When investors get greedy, it's often a contrarian indicator to sell. It's possible that some traders took this analysis to heart, and their selling kicked off the long liquidations. At the time of shooting, BTC's price is at the bottom end of the 27 to 29k range, where it was trading 1 month ago. If it breaks below this range, the next stop would be the 22 to 25k range, where BTC was trading earlier this year. If we break above this range, BTC will retest 31k and possibly rally to 34k. This begs the question of whether last week's crash was a standard correction or the beginning of another leg lower. From a TA perspective, it's not immediately clear. From a fundamental perspective, the fact of the matter is that cryptos won't come close to their previous highs without institutional investment. Regulatory uncertainty and the shutting off of crypto to fiat ramps like Silvergate Bank's Sen have discouraged direct crypto investment by institutions. As reported by CoinDesk, institutional investors have been investing indirectly in cryptocurrencies like BTC and ETH through paper derivatives found on traditional exchanges like the CME. The silver lining is that the popularity of these paper derivatives continues to rise, meaning institutions are very interested. Now, the only thing stopping them from investing directly in the crypto market is regulatory uncertainty, especially around stablecoins. That's because stablecoins are how institutional investors can easily get large amounts of money in and out of the crypto market, hence why stablecoin market caps are so large. If you've been keeping up with our coverage of the ongoing crypto crackdown in the United States, you'll know that the hostility against stablecoins has its roots in fears that stablecoins will compete directly with CBDCs and other similar technologies, such as the Fed's upcoming FedNow payment system.
What do you guys think about the FedNow payment system? Real quick, Mr. Mark in the chat, you said you have 5 cent electric. That's amazing. Also, if you haven't mined before, there is a site called Unmineable. I don't know if you know about it, where you can more or less clock your cards or mine, say like you wanted to mine ETC, right? Because it's not like as core intensive on your GPUs, right? So it's not going to cost you as much electricity as like Raven or whatever, just mining Kapow, right? A Kapow algorithm. So you could set it for, say, mining ETC, and you can get paid out in whatever you want, like Dogecoin, Flux. There's a whole bunch of different options on that site. They have like over 75 coins. So I can send you a link to a video if you want to watch like a beginner's guide. I kind of walk you through the entire thing. It might help, but then you're going to have to do the overclocks and stuff yourself. So just keep that in mind. But yeah, that would be my suggestion, just to look into that first to begin with. And then, after you get it up and running, then go around and start looking at manual miners and all that. That would just be my opinion.
If you watched our recent video about USDC's depegging, you'll know that stablecoin issuers are stuck between a rock and a hard place as a result. If they claim stablecoins are used for payments, they'll get wrecked by the Fed. But if they claim stablecoins are used for crypto, they'll get wrecked by the SEC. This is because SEC Chairman Gary Gensler believes that every crypto except BTC is a security, including stablecoins.
Get some Genslers in the chat.
This makes no sense given that there is no expectation of profit when investing in a stablecoin.
There's that video, bud, by the way.
This hasn't stopped the SEC from pursuing stablecoin issuers like Paxos. Speaking of which, Gary finally spoke before the House Financial Services Committee last week. I say finally because the last time Gary had testified to US politicians about the SEC's activities was way back in October 2021. Not surprisingly, most of the hearing focused on the SEC's scrutiny of cryptocurrency. Now, we'll be summarizing everything that Gary said during the hearing later this week. All I'll summarize for now is what Gary said about stablecoins. In short, he believes that all cryptocurrency stablecoins are used for crypto, not payments, and specifically implied that Circle's USDC is not used for payments. This is significant because Circle has been arguing that USDC is used for payments and has been lobbying US politicians to pass regulations that would give the Fed authority over payment stablecoins. This is presumably a part of Circle's admitted endgame, which is for USDC to become the CBDC of the United States. As it so happens, Circle's chief strategy officer and other pro-stablecoin personalities testified to the House Financial Services Committee just 24 hours after Gary did. Obviously, the topic was stablecoin regulations.
Real quick in the chat, Eric Valentine asked, should I transfer all my coins off of Coinbase? I live in the US. So, good rule of thumb, you don't want to keep any of your coins on an exchange. Doesn't matter what exchange it is. Coinbase, I have some stuff on there. It's just stuff that I don't care about. Like, it's not so like I'll have my money or my crypto that I want to exchange for fiat or want to get ready to dump when the market rises, right? I'll leave that on an exchange. but there's always a risk that could get hacked and stolen because I'm not in control of it, the exchanges. Then I also have, a wallet that's on my phone. That would be just a kind of like a warm wallet or a hot wallet. I use Trust Wallet. That's an app you can use. I put all my crypto in there. That's kind of like my checking account for crypto. And then I have a savings account, technically, which would be like my ledger that's locked up and I don't use it, right? I don't touch it. So those are the three best ways to do it. I found anyways. I just transfer it from my Trust Wallet to Coinbase and then sell it from Coinbase. And if I want to have like, say, Shiba or whatever lingering around, I'm not going to transfer that back and forth because it costs a bunch of money to do so in transaction fees or gas fees. You know what I mean? So I just leave it on the exchange, and if I lose it, it is what it is. That's my opinion, though. So, I mean, I think you'd be all right with Coinbase overall. I don't think Coinbase is going to be disappearing anytime soon, to be honest.
What was said was even more eye-opening than what was said during Gary's testimony. So, all I'll summarize now is what was said by Maxine Waters and other Democrat politicians. In short, Congress is starting from scratch on stablecoin regulations, meaning they won't become law anytime soon. This means that stablecoin issuers will continue to face scrutiny and regulatory uncertainty for the foreseeable future. All the witnesses stressed that continued scrutiny and uncertainty will drive stablecoin development overseas, and stablecoin issuers aren't the only ones leaving the United States. Coinbase, the largest and best-known US crypto exchange, recently confirmed that it will be launching an offshore cryptocurrency exchange as soon as this week.
Just in time.
Now, Coinbase initially announced it would be looking to launch an offshore exchange in mid-March, presumably.
So this whole thing, right, is coming down to the fact that the SEC is giving them the Wells notice and just being a complete pain in the ass, right? So Coinbase is kind of covering their butt, saying that they will move forward and, go somewhere else if the US is going to be a complete pain. And then that's going to really drive the crypto market into a bad place in the US, and everybody else is going to take off. That's at least my opinion. But I don't know. I mean, I don't think Coinbase is actually going to get out of the US, knock on wood. I hope not, because I use that exchange. So that would really be unfortunate, and I'd have to find a new one. And I don't want to have to pull a max voltage and change where I sell my stuff. Know what I mean? Max? Feel me?
Presumably in response to scrutiny around staking. For context, the SEC sued the Kraken cryptocurrency exchange in February over its staking services, which the regulator claimed were unregistered securities offerings. Although Coinbase had already been facing SEC scrutiny, the staking crackdown seems to have been the straw that broke the camel's back. Regardless, Coinbase's upcoming offshore exchange could be a bullish or bearish sign. It could be bullish because it will likely increase Coinbase's overall profits, which could improve investor sentiment for crypto in general. It could be bearish, though, because it would mean more crypto capital and liquidity moving offshore. And It didn't take long for others to follow suit, as Gemini also announced that it will be launching an offshore crypto exchange. Interestingly, trading will take place against Gemini's own stablecoin, GUSD. This could take market share from Tether's USDT, which is used mainly for trading. To Gemini's credit, co-founder Cameron Winklevoss realized back in February that the next crypto bull run will be driven by countries in East Asia and is positioning Gemini to benefit from this. I'll be doing a deep dive into the countries that could drive the next crypto bull market tomorrow, so stay tuned. Now, as some of you may have heard, the European Union finally approved the Markets in Crypto Assets, or MiCA, regulation. I say finally because the final vote was postponed twice due to supposed translation issues. I suspect it had more to do with pressure from the United States, but let's not go there. Now, if you've watched any of our videos about MiCA, you'll know that it's basically the first comprehensive regulatory framework for cryptocurrency anywhere in the world.
Real quick, I just put a poll in the chat or a second ago. CoinEx, somebody mentioned it this morning that it was today was the last day to get your funds off of that exchange if you live in the US. So make sure you guys do your due diligence and go check your emails. Make sure that is the correct information if you use that site, and get it into like just a wallet somewhere. Even if you have to download Trust Wallet, Exodus, just a wallet in general. Get your funds off there just so you don't get stuck. That would be my suggestion, I guess.
More importantly, the MiCA regulation provides clear definitions for different types of cryptocurrencies and their regulatory requirements. MiCA also specifies that these rules and regulations do not apply to truly decentralized cryptocurrencies and protocols. This means that DeFi will continue to thrive on the continent, at least until DeFi-specific regulations are introduced, which is only a matter of time. As for MiCA, it goes into force in 2025. Now, in theory, there should have been a waterfall of institutional investment after MiCA was finalized. In practice, though, we saw a waterfall of prices instead.
Mr. Joker Miner gifted 5 memberships. Dude, you're insane. Thank you so much. You didn't have to do that. We got Automatic Beats, Andrew C, Ninja Kid, Golden Wolf, and B-Lubs. Appreciate you guys. Hit that like button. You guys are awesome. Joker Miner, you're the man. I appreciate you, buddy. Thank you so much.
Now, this doesn't make much sense until you realize that MiCA includes a provision which effectively bans USD stablecoins like Tether's USDT and even Circle's USDC.
Oh, Alex actually said that CoinEx is already shut down in the USA. Really? I didn't know that. All right. So, well, I technically, right, I guess it would be shut down for new oncoming users, right? If you haven't signed up before. Because if today's I assume today's the last day for people that were in CoinEx prior to, I think, February, they actually shut it down or stopped people coming in from the US. So yeah, just make sure you guys get your stuff out of there. Oh, you can't log in either. Interesting. That's crazy. I wonder if hopefully you didn't have anything on there, but yeah, I don't think they would lock you out of your funds as of yet. Tomorrow, that's another story. I don't know. But check your emails. Check your emails and see what they say.
Fortunately, both stablecoin issuers also offer euro stablecoins. Unfortunately, it's not guaranteed that these stablecoin issuers will be able to effectively compete with European banks offering euro stablecoins of their own. It's also not guaranteed that European banks will be comfortable working with stablecoin issuers. As a not-so-fun fact, hesitation from the banking sector has been an even bigger hurdle for the crypto industry than crypto regulations. This is why the news of Chinese banks providing banking services to crypto companies in Hong Kong is so significant. Simply passing pro-crypto regulations is not enough. Passing pro-crypto regulations may also not be enough to motivate institutions to invest in the industry, even if banking services are no issue. That's because, for the first time in a long time, institutions can earn 4% interest on their cash, and this rate will continue to rise as the Fed continues to raise interest rates. Now, any American viewers will know that you won't get this 4% interest rate at the bank. That's because banks make money by investing their customer deposits in assets. Most banks are investing customer deposits in these same interest rate instruments and giving the customers only a fraction of the total gains. As time goes on, the average depositor is becoming ever more aware of this, and they're starting to wonder if it's worth it to move some or all their excess cash to somewhere where it will earn a yield. Now, to my understanding, the biggest hurdle to this has been the process. It can be complicated. Well, Apple is hyper-aware of how complicated these kinds of things can be. Lo and behold, simplification is literally the unique value proposition of the company. While this simplification has so far been focused on computing hardware and software, Apple seems to be expanding into financial services with its latest product. Apple's high-yield savings account allows Apple card holders in the United States to earn a whopping 4.15% on their savings with zero fees and no minimum balance or deposit requirements. This product was, of course, made possible thanks to a partnership with Goldman Sachs, one of the biggest banks. This means that almost 140 million Americans have the ability to seamlessly transfer their money from their regular bank accounts to Apple with a few clicks of a button.
Simple.
I reckon it's safe to assume that many Apple users are wealthier than the average American, meaning Apple users probably have most of the money. If you watched our video about the recent banking crisis, you'll know that it was caused by banks being unable to honor customer withdrawals, because they had invested customer deposits in assets that either couldn't be easily sold or couldn't be sold for the initial purchase price.
Joker Miner, you're insane. Thank you so much. Another 5 gifted subs. You're insane. We have Mark Marie. We have Orange Husky Mining, Sadie Sometimes, David G, and King Mining. You guys are awesome. And Joker Miner, cut it out. Save your money. Jeez, you're killing me. Feel bad. Thank you so much.
These so-called unrealized losses aren't an issue unless everyone rushes to withdraw at the same time, which is exactly what we saw with Silicon Valley Bank. What's been happening since then is a slow drip of deposits out of mostly small and medium-sized banks into big banks, and Apple's savings account could accelerate this. This means that we could start to see more small banks go under in the coming months. This could do even more damage to the already battered commercial real estate sector. If you watched our video about that, you'll know that small banks issued most of the existing commercial real estate loans. You'll also know that lots of commercial real estate loans have been purchased by so-called shadow banks, such as private investment firms like Blackstone. And can you guess who's been giving Blackstone the money to buy commercial real estate loans? That's right, you have, via your pension, as always. Well, US regulators seem to be aware of what's coming. The Financial Stability Oversight Council recently proposed a rule that would allow them to designate non-banks as systemically important. This will give them the ability to protect the assets of non-bank entities such as Blackstone if they go down. This is the same way that US regulators were able to legally protect customer deposits at SVB and Signature Bank when they went down.
I love that meme.
It will also
Hysterical.
likely result in the same response, a massive expansion of the Fed's balance sheet, which could cause the crypto market to pump. But at what cost? And so, this brings me to the section that many of you have missed, and that's last week's top performing cryptos. I want to start by drawing your attention to the ETH BTC chart because it's something that gives you a sense of how well altcoins are doing in general and where they could be headed next.
They have a new Coin Bureau trading channel, and that guy that's on there, whoever, I forget his name, but he is excellent at teaching. So like if you guys want to go watch some real good trading stuff, he kind of breaks it down quite simply for you. So I think it's Coin Bureau Trading, if I'm not mistaken. So go check them out.
Well, ETH is struggling to get above 0.07 BTC on the weekly chart and was rejected at that level last week. This is consistent with the monthly chart for ETH BTC, which shows a continued downtrend, ETH and altcoin weakness. Now, this doesn't mean we couldn't see ETH and altcoin strength in the short term, however. Anyway, last week's top-performing cryptos were Zilliqa, BitTorrent, Unised Leo, Render Network, and Tron. Eclectic, let's just say that.
Of course, there's Render. Of course,
so,
Render's
starting with Zilliqa, the Zil coin appears to have pumped in response to the project's recent EVM compatibility upgrade, which will be put on full display at CoinDesk's Consensus Conference this week. This could mean Zil will continue to rally, but it faces significant resistance around 4 cents. So, watch that level.
Oh, how many of you guys are dual mining Zil and say Ironfish or whatever? That's awesome. I've never minded, but I'm interested if you guys did, and I'm aggravated because I sold my Render, but I'm gonna have to get some more.
Next up, we have BitTorrent. The BTT token appears to have pumped in response to the release of BTFS Storage 3, a decentralized storage network powered by BTT. The release seems to have caused a massive spike in BTT's price on Binance, though these gains have since been erased. BTT appears to be in a strong long-term downtrend. Now, I can't say I'm familiar enough with the project to make a call on whether BTFS Storage 3 will be enough to reverse this downtrend.
Real quick, Mr. Who was it? Who said it? Who said they never dual mined? Budweiser. I bought Zil, never mind it. Never dual mine. Chris Hanley, but I really need to. So one thing I could say about dual mining is when Ethereum became like the big second thing to dual mine with Ethereum, when Ethereum was still around, my electric bill skyrocketed because I didn't realize how much extra power each rig was actually pulling. And I mean, I saw it, but I didn't realize how much money it was going to cost, right, to do that. So just bear in mind when you're mining, you know, two pretty heavy algorithms at the same time, that's when you get into a pickle, right? So just, I don't know, Ironfish and lithium seem pretty simple. I mean, not lithium, Zill seem pretty, okay to do dual mining, but just be wary when you come to doing all that stuff. Just my
As
two
for
cents.
Unas said Leo, there isn't much to say. That's because Leo is Bitfinex's exchange token. This means that Leo's price is ultimately dependent on what Bitfinex is doing. If I were to guess, Leo pumped because of the spike in trading volumes on Bitfinex driven by last week's liquidations. Regarding Render Network, meanwhile, the Render token appears to have rallied in response to a past governance proposal that will expand the project to the Solana blockchain.
What? Are you guys into Render? I'm going to put a poll in the chat real quick.
It makes sense that the proposal passed, given that Render Network has the same investors as Solana, including the now disgraced Alameda Research. Ugh.
So I don't know if you guys know, he says, I don't know if you guys know, like Render. So the whole thing behind them is to more or less take a whole bunch of GPUs and have them render, say like if you export a video, that video needs to be rendered throughout your GPU or your system, right? If each GPU, like out of 100 GPUs, can take a little piece, render this thing and put it all back together and send it back to you within like minutes instead of hours, that's kind of what Render's going for. And if that gets pushed, like I don't know, I think it has a bright future, but it's just it's strange how you get involved with it. Like you have to fill out an application and they have to accept you, which is kind of weird. And I think acceptances are not on right now, or not open rather. But yeah, I don't know. It's kind of a neat project, and I'm kind of pissed that I sold mine, but I really hope it I don't know, kicks off.
Believe it or not, but Render is looking pretty bullish. It's broken out of its lows and seems to be setting up for another rally. This assumes that what I'm looking at on the daily chart isn't a double top, which could be the case considering the excitement of the Solana migration has likely been priced in. And finally, we have Tron, whose TRX, or Tronix coin, appears to have pumped because of the project's involvement in the NFT NYC event, which took place earlier this month. In contrast to Render, Tronix is looking pretty bearish. The weekly chart reveals a massive descending triangle, which could break up or down. If it breaks up, Tronix will moon. The fact that Tronix continues to bash against the bottom range of the triangle suggests it will break down. That would not be pretty.
Wah, wah.
Now, if you enjoyed this section of the news, then you definitely have to follow our Coin Bureau Insider Telegram channel. That's because we have...
All right, I'm gonna shut that off and just say thank you to Mr. Coin Bureau. So anyways, yeah, I'm not sure exactly what the outlook of DNX is, to be honest. I've never looked into DNX, but it could be the same thing. I don't know. Is that what they're doing? Are they going for Render and stuff? I have no idea. Mr. RC said, if I'm not mistaken, Render just rents its compute power from big players like AWS. I've never heard of anyone getting accepted into Render, and I can honestly say I haven't either. I heard somebody applied for it. I forget who it was. It was somebody in one of my chats said they applied to be in the Render network, but that's kind of why I'm bullish on it, to believe it or not, right? So hold on, let me see. I do have to get out of here in a second though, guys. I gotta go call somebody. This let me see if I can dark mode this. It's gonna look like crap. Oh god, yep, nope, can't dark mode that. It just disappears. Look at this. Dark mode disappears, so it's just gonna be bright. Give me 1 second. Sorry for blinding anybody. All right, so distributed GPU rendering on the blockchain. Now, again, it's meant to use a bunch of GPUs to render one thing. So like it'll take minutes instead of hours, right? They did an example on a video we watched prior, but I don't know. It's a cool concept, right? And for GPU miners, if you could rent out your entire rig, right, say, to this network to get I don't know, just to render projects instead of, you know, mining, how much how much electricity would you really use running like say a 12 card rig at your house and on this network? It's, I don't know, it's kind of neat, right? So I hope it goes somewhere, and I hope I get involved with it someday, but who knows? Who knows? All right, let me put that down. It's way too bright. 74 in here, 33 watching. Smash the likes. Appreciate you, Joker Miner, and thank you so much for all the friggin' memberships, dude. You're insane. You didn't have to do that. I've got my rig on Flux and my gaming PC on Nexa. Was mining Caspa for months until the recent difficulty spike. Can't keep up. Mr. Jonesy, I feel you. It's it never gets easier. How do you buy render on Coinbase? You can buy render on Coinbase. That's where I sold mine, actually. And that's more of the reason that I wanted to get into it, because it was on the exchange that I use, which is a trusted exchange, from my opinion. And yeah, I don't know. It was nice. It was just simple, right? Simple and easy to do. Coincase. Did you mean to write Coincase? Thought I heard my kids. Sorry. Thought I heard something upstairs. All right. Do you guys have any last questions before we get out of here? Unfortunately, I do have to get out of here. Little Stanky. What did he say? Mr. Patrick Murphy added me in the chat. Little Stanky, where? I don't know. If you have a question, please post it again, because I cannot see it. Apologize for that. Yeah, I don't see it. I'm sorry, buddy. No, I'm on live chat. I am on live chat. All right, let's see. So 10% of you guys, the poll. I just ended the poll, actually. Somebody got their vote in. So we have 11% yes invested in render, and 88% say no. So yeah, let me know what you guys think about render. If you guys decide to look into it, I'd like to talk about it another time, because I'm super interested in it. I thought you were talking about yourself, said Dan R. What do you mean? Chris Hanley. Let me see. Alexander. CoinX account 0 balance, deleted account. No. You lost your funds? No way. That's awful, dude. Really? That's terrible. I'm sorry, man. I am very sorry. Let's see. Happy birthday to your little one, Joker Miner. It's your kid's birthday? Oh, it's tomorrow. That's right. Yeah, tomorrow. Okay. Tomorrow. No rig picks chat yesterday. No, we didn't do any rig picks. There was actually only like 3 rig picks in there, so I figured I'd just do it like once or twice a month, I guess. Oh, you sidewinder, says Chris Hanley. Yeah, I don't know. It's entirely up to you guys. I mean, if you guys post pictures, we'll go over rig picks. That'd be awesome. Unfortunately, I can't post any rig picks, so I don't have most of my rigs here. But all right, guys, I really have to get out of here. Unfortunately, I got to do some adulting and make a couple phone calls. But little Stanky was on the render wait list. That's who it was. That's who it was. You're right. You're right. No, Panda. 0 chance. All right, guys. Love you all. Hopefully you have a good day. I'll be back tomorrow morning, 8 a.m. Eastern Standard Time. Until then, have a great night. I'll catch you soon. Peace.